Okay, good evening, everybody. It is Thursday, October 19th, 2023, and this is PreciseAlgorithmTrading.com. Um, let's dive in here to look at how our positions did. These are our automated trading systems. I talk about this just about every day. Um, it's actually interesting in a day like today when the markets overall were pretty down, bearish. And testing a lot of people's patience, including mine, and part of what I do. How these automated trading systems are up. So that happens fairly often, which is I think pretty cool because it offsets some of the other stuff that goes on. So having a balance of those things, it's really diversification of in the way we approach the markets, and makes it so, like I say, we're diversified. It's a little bit different than the diversification a lot of people talk about. It's a little bit more complicated, but anyways, so the Dow here is, these are our futures, and this is the results of our trading. This is the equity. Um, since 418 and over the weekends, I break it out a little farther, like for a year's worth of data or a little bit more. Anyways, this came up today. It's been pulling back lately. I'd like to see this come back up and spike back up again, something like this. But it's probably gonna not do it all in one big pop. So this is the trades for today, 1019. There's quite a few of them actually, but mostly winners. And yeah, that's almost all you can ask for. So actually, this whole page is mostly winners. So from 1017 through today, a few losers along the way, but it's pretty productive actually. Uh, I say it probably won't do it all at once, but this is the Russell, and the other day it came back to life almost all at once. And since then we've been waffling back and forth a little bit. Today we had, I think, one trade that worked out positively. So that's 1019 right there. And this one's a little different. We've had mostly, losers as far as number of trades. Oops. But that one big one in the middle there is the one to really pay attention to. And that's the point of these systems, is you have little losers, but then you get bigger winners. That's the case here, and certainly the case with our NASDAQ trading system, which we've been back to the upside quite a bit lately. So full disclosure, in case you guys haven't been following, I did change up the parameters of this one a little bit recently, and so um, it trades a little bit more often, which I don't like, but it sure gains a little bit more, which I do. So for what it's worth, that period of time during that pullback was about a month. This pull back right here was not quite 3 weeks. So the rest of the time, these things generally have been going up, and I'm going to blow that up over the weekend and show you 15 months worth of data. And I did that last weekend too. Or maybe I didn't, but last weekend was when I've been messing with this thing for 6 weeks or so, and it's outperforming the old version. Not that the old version, I mean, the old version will be fine. It's just it's a little bit better. So, or at least depends on how you look at it. It does trade more often, which is a little irritating. Anyways, so today's trades, and there's a lot of them. Um, it's probably more losers than winners, but again, there's your big winner. That one's not bad. That one's not bad either. And you have smaller losses, and then we go into a whole second page of them. And that really the one to call out there is that one too. And not to mention, we're trading with 3 contracts now, where we used to be trading with 5. So even though it trades more often, we're trading fewer contracts. So it's probably a push on commissions, but it's really not about the commissions. It's more about making the money and making the gains. So that's our automated trading systems, and that's our update. And those things are really nice for today. Let's talk about the rest of the markets, which are, let's get it off of CSX. This is the S&P 500, and it is doing everything it needs to do to shake off as many people as it can. That's what it does. I'd like to point out this line that I drew up here is really where the selling kicked in, because we got a gap lower there, and then when it came down, it pulled all the way up to there, almost filled that gap all the way before it rolled back over again. So I think that's interesting, and it's something that frankly we should be able to see coming. So, and we did. Played some things to the downside. Didn't play the S&P to the downside because I actually think it's going to bounce any time now, potentially. I'm not saying it will, because it might not, but it is doing what it needs to do to potentially bounce and shake off, get people bearish and then blow back bullish, and all it needs is a catalyst to do that. So that's the S&P, and actually I'm going to dive a little further before I change into the other markets. So I showed this last night, and this is a average true range ATR trailing stop, and I believe it comes standard in Thinkorswim. It's in a lot of platforms, but you notice here it flipped from purple to blue. In this case, this is how I have it colored, and it's pulled back. Well, in order to flip, like if you look back here, it flips, pulls up, and then pulls back. This is the place to buy in the pullback. This one would have been fine to buy before the pullback, and maybe take off some after a few days when you've got some gains. Take some profits before it does a pullback. But anyways, you could buy on the pullback as long as that blue line stays intact. And then look at that, it stayed intact for literally months. I think these red lines are month indicators. So, and then it flipped here and went bearish, and then it flipped back up and it went bullish, but it didn't stay there. So you can count these like winner, big winner, small potential winner if you took off your trade below 3 ATR or something like that, or if you trail your stop. This would have been probably a loser, because you would have wanted to get in my opinion, on the pullback here, and then it would have pulled up for a day or 2 or 3, and that I wouldn't see much reason to get out there until you get a red arrow right here, which that would be maybe a potential break-even trade, but it's probably a little loser. And then you could flip here when this thing broke, if it broke on this day, which I'd have to look at some of the metrics, but even still, if you got in at the open here and it went lower as it went down here, that could be a winner. It's now, my point is, it's come back up through and it's broken it and it's pulled back, and are we going to see something potentially where we get a climb out of there and we start going bullish again? This is what it takes to do that. So it could roll over and die. We could get one of these, or we could get a catalyst, pop this thing up, and start going higher. So we won't know till we get there. This is the McClellan oscillators, and the real thing behind these McClellan oscillators is when both oscillators for the NYSE and the Nasdaq are either over 60 or under 60 at the same time, that can be a potential reversal. And they're both under 60 as of today, and they can get way over sold or under 60, and they can get way overbought or over 60, which is why I have the 200 level called out in here. But literally, like every time they get under by, you know, I don't. That doesn't look like a finishing candle yet, but we could get a spike bottom here, um, and this thing could push lower and then back up again. But every time we get under 60 with both of them at the same time, here price went up momentarily after that. Here, price went up after that for a while. If you go way back here, they both got way oversold, and then that was the catalyst, or that was part of it, to get us going higher again. And then they got oversold again, and they didn't do it all on a straight line, but they went back up again. So keeping an eye on the McClellan oscillators helps me, and I just wanted to share that. I've done it before, and I'll continue to look at that. And then here's another one. This is the same average true range stop, basically, is what it is. It's an indicator of when price flips. And weekly, daily, and hourly, just like we always look at. And the notable one here is the daily, which is the one we were just looking at. It has flipped, and the only way it will flip back is if it closes underneath this green line on a daily candle. Well, this is a weekly candle where it is in the process of flipping, but it's not over till Friday. The end of the day, Friday. If this doesn't close below that green line, this orange will go right back to where it was and go straight across here and will bounce. Because all it needs is a close, and that's a weekly close. So I'm watching that, and if it does that, we could break to the downside. We're still bullish on the weekly EMAs. We're bearish over here, but we've turned bullish for this indicator. And then another thing to look at is on the hourly. It'll happen on the hourly. It's already happened on the weekly, but if the hourly breaks higher and flips this orange back to green, then the odds of this orange line on the weekly going away and the green holding, I'd say, would be a lot better. We can watch that through the day tomorrow on a Friday. Don't have to stare at the computer, just check in on it, and you can see how this market might go. And I think that's all valuable information. And for what it's worth, if we look at the Russell, it's the same thing. So we're bearish, bearish, and bearish, and we're looking for when do we start to bounce, and when does it become real? Now, this Russell's been under on the weekly for a while. Let's use the Qs for the Nasdaq. They're flipped and they're good on both time frames, the weekly and the daily, and that's kind of important. So watch the hourly for the continuation of that. As far as, it's kind of like looking at trend. So, and we can look at oil. I'll use the ETF just because I think it's the easier thing to trade. So oil, look at that. It's, I think, well, hopefully these charts speak for themselves. You can trade it off of the hourly and look how great you'd be. So I think that takes a little bit more maintenance and staring at the computer to do that. I'd rather trade it off the daily personally, so I don't have to do that. But anyways, there you go. Um, so let's flip back here and go through this real quick. But that's enough to look at. So there's oil. We looked at the SPX. Let's look at the actual Dow. It's the same as, I guess we didn't look at the Dow. We looked at Russell. Um, same kind of thing. We're waiting for these things to reverse. So don't confuse my Harvard lines with that ATR stop either. It's not the same thing. Russell, the Russell looks weak, and that's going to hold the market back for a while. So until that thing bounces, it's going to take something for that to bounce. So it can lag, and that's okay. I'd rather this whole thing went back up together, but we got to wrestle through it is really what it's boiling down to. So, um, and then the transports, IYT. So they've broken structure here at the bottom. That was looking like a consolidation zone, and now they look like they're trying to go lower. So that's the markets in general. And then finally, let's go over here and look at stockcharts.com and type in bullish. Here are the industrials. They didn't move today. The NYA minus 3.56%, still on a column of O's. Still, yeah, okay. Looking for really a reversal to X's at some point. The transports, sold off quite a bit, down 22.22%. It is worth noting that only 35% now of the transport stocks are on a bullish point and figure buy signal. So we're getting to the point where if too much bearishness ekes into the markets, which is what happens when these things go way down here, the reversal becomes inevitable. The NASDAQ down 2.48%, but it's still on a point and figure buy signal because the definition of a point and figure buy signal. So it looks like it's on the precipice of flipping over to a point and figure sell signal, but it's not there yet. The SPX on a column of X's, down 7% today. So that's an interesting one to watch. The OEX on a column of X's, down 2.63%. And then really the NDX is the one I'm really watching because it flipped to a column of O's, minus 5.88%. But from this kind of a pattern, if it flips back in a big way, we'll have a point and figure buy signal that could form pretty quick. And if that happens, I'd say we're going to be off to the races to the upside. If not, we're going to keep grinding lower, is the way I see it. So that's what I got. So hopefully that stuff helps. I know sometimes people are looking for ways to tell what direction is likely in the markets, and I think I just gave you some pretty good stuff. So with that, take care, guys. Good trading, and we will talk to you on the weekend review. Good night.